Buyers right now are asking, did Metro Vancouver's housing market finally hit the bottom, or are prices set to slide further? Today's July numbers give us the clearest signal yet. Everyone thinks that listings are automatically pushing prices down, but the data tells a different story. A year ago, affordability pressures kept many buyers sidelined, but today, with rates holding steady and inventory surging, the playing field looks very different. July was another month of transition for Metro Vancouver real estate. After June hinted a turning point, July confirmed it. Sales activity is slowing but recovering, and prices are still edging downwards. But according to the Greater Vancouver Realtors, 2,286 homes sold across the region, just 2% lower than July 2024 and well below the 10-year average. So let's get into the details, sales, and listings. So in July, total sales were 2,286 sales, down 47 sales month over month, and down 2% year over year. So what we're seeing in sales is buyers are seeing more breathing room compared to the frenzy of past summers. Sellers are still facing longer days on market and still need to price strategically, and sales still remain 13.9% below the 10-year average. So this is still a slow market by historical standards, but a 2% drop year over year for this month is not that bad, as we have seen way bigger drops, upwards of 10% year over year in some other months. So now for listings, there were 17,168 active listings this month. This is up 20%, so 19.8% year over year, and slightly down month over month. So we said sales remain 14% below the 10-year average, while listings are 40% above the 10-year seasonal average, meaning choice for buyers is still abundant. Sellers, however, are competing in a crowded market, and only well-presented, well-priced homes are standing out right now. Okay, now let's move on to benchmark price and sales to active ratios. So the overall benchmark price in all of Metro Vancouver is $1,165,000. This is down 0.7% month over month and down 2.7% year over year. Prices are trending sideways, leaning slightly down, and the inventory is really reducing that upward pressure on pricing. So now let's look at the sales to active ratio for the overall Metro Vancouver market this month. The overall ratio was 13.8%. Below 12% is a buyer's market, above 20% is a seller's market, so 13.8% sits in a balanced to soft buyer market territory. If we look at specific market segments for property type, the detached market is the weakest, looking at 10.2%. The attached market is quite strong, so that's townhomes and half duplexes at 16.7%, and then condos are kind of in the middle at 15.9%. Now let's look at market drivers and give some context to these numbers. So interest rates is always going to be a big factor when it comes to the Metro Vancouver housing market. A lot of buyers right now are extremely rate sensitive. So the Bank of Canada held rates steady in July. This stability is helping build some buyer confidence. But we are looking at another rate cut in mid-September. So we will see. A lot of experts are saying that they are predicting the rates to go down like 0.25% or even like 50 basis points, which would be huge. But there is still a chance that they will hold rates steady. If they do cut rates in September, this is going to be a good sign for the fall market in terms of more buyer activity, absorbing some of the excess of listings, which should help bring some more stability to the market. If they don't cut rates, we still may see some buyers wait on the sidelines, although this could mean some stability, encouraging other buyers that are very cautious when it comes to interest rates to jump into the market. One of the defining characteristics of this market is the high inventory, and this high supply is preventing prices from going up, which is a good thing if you're buying in this market, not so good if you're trying to sell. But it gives buyers a lot of leverage, and then sellers are still having a difficult time moving properties off the market. We're seeing a lot of sellers that want to purchase as well are having a hard time selling their home, so this really preventing them from making a purchase in this market, which could be a reason why inventory is climbing much faster than sales and how it's not exactly recovering as quickly as we would expect it to by now. There's still some economic uncertainty, so ongoing trade negotiations with the US. Overall, this keeps the broader market more cautious. When we take a brief look at immigration and population growth, demand base is still pretty strong in the long term, but short-term affordability will limit activity. And looking at the numbers, this is not something that I would expect to limit activity on buyers because inventory is so high, and usually this causes prices to drop even quicker than they are currently. But as I mentioned earlier, prices are still trading sideways. We're seeing 40% more listings than the 10-year seasonal average, and pricing is just moving about 1 to 2% year over year. So in conclusion, sales are stabilizing, listings remain high, prices are slightly softening, and sales to active ratios confirm a balanced to leaning buyer's market. So the key takeaways for buyers, sellers, and investors. So buyers, this is your window. Lots of choice, softer pricing, and stability in rates. When we look at the trends for this current year, 2025, we are seeing things start to recover, but we need more months of data to confirm this. So if you're a buyer, interest rates are stabilizing, the market may be recovering, so we may be at the bottom. The time is now if you're going to make a purchase and you want to move into your new home before the holidays. So before Christmas, before the New Year's. Right now, possession from when you find a home, write an offer to when you get possession of the home is about 37 to 45 days on average in this market. So if you purchase in September, October, you still can get moved in and settled before the holidays. Now sellers, again, I say this in every video this entire year, pricing right is critical. Overpricing in this market will result in you just sitting on the market. Other homes are going to sell. Buyers are going to move to the more affordable and more realistically priced homes, and your home is just going to sit on the market. If you are serious about selling, you need to price competitively, especially if that means you can purchase in the same market. Think about it like taking a small loss on the sale of your home and then try to make up for that on the purchase side, because right now you have so much leverage as a buyer. If you sell your home, you're going to be purchasing nearly cash, so you can write without that financing subject, and you can probably get incredible deals on your purchase. Now for investors, we are still seeing strong rental demand in areas close to SkyTrains, but we are seeing softer rental rate environment. So what this means, if you can get a really good deal on a property close to a SkyTrain where vacancy rates are historically low, and you can charge competitive rents, getting in at a good price now can set you up for a lot of gains in the long term. So that's your overall market update for July 2025. If you have any questions, leave them in the comments down below. I will be sure to answer every single one of them. I have more market updates coming every single month, and I'm going to put out some videos on how to sell your home in a market like this. So be sure to keep an eye out for those, and I'll see you on the next one. Peace.